When you're done listening to today's episode, come join the conversation over on Telegram.
This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Welcome to Analysis in Chains. I'm Nathan Williams. Joining me today is Sebastian Markowsky. Sebastian is director at GP Bullhound. He's heading up their crypto and blockchain initiatives, and he recently contributed to the GP Bullhound Technology Predictions of 2019, where they had a section on the future of the crypto and blockchain industry. Sebastian, thank you so much for joining me today.
Thank you, Nathan, for having me.
You are my first episode of the new year, and I thought it would be a great idea to discuss where you see this going in 2019, because you've really had your finger on the pulse of the industry.
Absolutely. So, I think, 2018 was a very, very interesting year. Everyone went into it extremely bullish. We had the crypto market peaking, Bitcoin being super high end of 2017. Then we had the overall peak of the crypto market at 800 billion in, I think, January. And then we had a very, very strong decline, which in line with our crypto and blockchain report we published in May 2018, which was called Token Frenzy, predicted, because we'd seen a lot of projects that used an ICO to raise money, but the business model didn't necessarily support any kind of blockchain or token. So combining this with what we see in the overall market, where you have usually 50% of startups going out of business within the first year, and overall 90% over time without a meaningful exit event, that brought us to the conclusion that with all that hype in the market that we saw, there is a massive correction due, which then subsequently happened. And I think a couple of weeks back, we have really reached a 90% correction towards the all-time high. But we've been working in the meantime. We've seen a lot of very interesting projects, and the progress is really, really strong. And while for the overall masses, the market may have already disappeared again, or people keep asking if the market is still alive, we see a lot of very, very promising developments going full steam. And I think it's good that the market has normalized a bit, and all the people that were in for the money have gone out again. So 2019 can be focused more around products adoption and getting actual solutions live and in the market, which is something that's desperately needed in blockchain and is long
Everyone
overdue.
Everyone was so excited in 2018 about the potential for a recovery, just because 2017 ended so strongly, and I think a lot of people were really disappointed when it didn't pan out. But most people who were really looking for this market recovery were very much focused on the utility token ICO. Do you think that there's still potential for the utility token ICO, or has that ship long sailed?
Yeah, I think for a very few protocols it may make sense. So if you think about a protocol like Ethereum, I think their utility token makes sense for now. I wouldn't say it will always make sense. So also there, I think we will need to see how a shift to proof of stake will influence the token economics. I think generally for many projects, a utility token basically represents a business model that is, from the token side, focused on capital gains. And if a business only runs for capital gains, it's a bit problematic. So what we have seen a lot, and that already mid of 2018, is that you have multi-token models, where you have a more equity and governance-oriented token that has a claim on future dividends and taxes that are collected by the protocol. and then you have I wouldn't call it utility, but kind of a payment token in a broader sense, which you can buy, you can invest into products that are traded on the protocol, and you have some reasonable interlinking between both of those tokens. And in some cases, we even had the addition of non-fungible tokens for specific capturing of data. So I think a multi-token model is the current state of the market that we see evolving, and that's probably going to be here for long, which is in fact again the old world translated into the blockchain world. It's not as utopian as the idea of a utility token was, unfortunately.
Now, this is on a more personal note. I've known you for a while, and you've always been quite bullish on crypto and its potential to disrupt. Has the past year and your predictions coming true about the market changed your view at all? Are you still very bullish on crypto and blockchain, or have you taken sort of a more moderated view?
No, I think my enthusiasm for blockchain being the fundamental technology that may enable one of the most pivotal shifts in what probably we will witness in technology is still very much there. I think what has changed a little bit is that while initially, and we've been discussing this a lot offline about base layer protocols and infrastructure protocols and developer tools, which was the narrative of 2018, and we've seen this shifting very, very strongly away from that more towards applications. And I think applications which will mean adoption, which will mean wallet openings and people actually owning and touching and trading eventually even cryptocurrencies, and blockchain ownership is something that will be the most important thing near term, and this then leads to a further thing that we've monitored in the market, which is the strong capital formation among exchanges. So I think the exchanges, issuance platforms will be where most dynamics will catalyze over the next, I would say, 12 to 18 months. They have all piled up significant funds. They have done huge fundraisers. I know it's all very, very centralized projects or companies, but usually the ways of disruption are a bit different than everyone foresees. So we expect most of the activity happening there. The near future of cryptocurrency will be fairly centralized, and it's really about getting people to use open wallets, use blockchain, use tokens, and get familiar with it. And then it will permeate slowly downwards, where we will have a medium-term more decentralized future. Because I also think another problem is what we've seen. The more you decentralize early on in such a dynamic environment, the less you are able to cope with the progress that you need to make in such a fast-moving environment. And we'll probably see a lot of very promising protocols today that will suffer from that a lot.
It's interesting, isn't it, that the whole ethos of blockchain has been the hope of decentralization, the hope that we don't necessarily have to trust this one centralized third party with data, with keeping track of a ledger or what have you. But that's in a way led to problems in the protocols themselves. I think one of the things that I've been concerned about as the market matures and as we see more institutional money going in is that blockchain would be used to get efficiencies and secure the place in the market for a couple of existing entities or companies that are already quite powerful, with maybe one or two additions, but that the ideal of sort of shared power and distributed wealth and protocol and trust might be a thing of the past. And I'm just wondering, do you still see that is a possibility, or are we in danger of losing blockchain to the traditional players?
No, I think it's just something that happens very naturally. So to round off what I think will happen short term is that a lot of the activity will circle around the financial aspects of blockchain and cryptocurrency. There you have stable coins, which is a very, very strong phenomenon. A lot of good projects out there, very promising. Then we have the whole tokenization of assets thing, which I personally believe is something that we'll see very strongly developing in 2019, which is basically a securitization. So I don't think that we will see a lot of new things short term, but more again a translation of products from the traditional financial world that will be kind of enabled on the blockchain, and this is what will also attract institutional capital inflow, because people will go with products that they understand, and usually people are in for the money. That's the biggest incentive. So I think probably the very short term future will be a little bit disappointing for the technology side, because it will not really extract the whole 9 yards of value that blockchain can bring, but basically take shortcuts around the financing. But still, I think it's an important time, because it will strongly drive adoption. And then this is what a lot of good projects will benefit from if you have generally a user base of let's say 200, maybe at some point 500 million people that have access to cryptocurrencies, which will then drag the necessary masses into the technology, and then I think there is a very, very strong need for actually decentralizing things. I think the vision of a decentralized future is still intact, and I think a lot of the core infrastructure services that we will use in the future will be decentralized. So I think just the way to get there is probably a little bit different than how many of the early crypto enthusiasts would want it to see.
You mentioned stablecoins and tokenized assets being the future.
Yeah. I think, the whole market of tokenization of assets is basically limitless. Yeah, I mean, if you talk about real estate, or in some shape or form, security token is tokenized equity, right? It's far from the original idea of a utility token, but it's tokenized or securitized equity. But you have real estate, you have even arts, you have a lot of things that you can tokenize on the blockchain, where you can make trading more efficient and enhance secondary market activity. So I think I don't think it's a extremely powerful blockchain use case, but short-term gains on efficiency due to cost savings is something that, as I pointed out earlier, will probably drive short-term interest. And on the stablecoin side, I think, given a lot of the projects we see do use a stablecoin or a stable token, which is this payment token, which needs to be kind of stable in price. Otherwise, I see problems, and a lot of the entrepreneurs share my view that if a token has increased in price like 10 times over the last 3 months, it's probably tough to imagine Siemens buying some of those tokens. So I think there is a kind of a stable coin as a service, because you have two options. You can either become a bank and offer a stable coin yourself, which is something that may not make most sense for many projects, or you kind of cooperate with one of the good stablecoin projects out there.
Now, you mentioned also that people are much more interested now in applications and second layer protocols, things built on the existing base layer that we already have. Now, we haven't completely solved all of the problems that Bitcoin and Ethereum and all of the base layer protocols have with throughput, with speed, with power usage. But do you see that that being an obstacle? And if not, which protocols do you see being most desired by the projects in 2019?
Absolutely true. So I think there's a lot of progress happening in parallel, but very few of those projects have surfaced. And I'm pretty convinced that we will see a lot of progress on how we can technologically evolve around all those topics. So I assume them to be solved, many of them to be solved over the next 5 years, because just the speed in the sector and the expertise of all those great engineers that spent more than last 6 months in crypto is really astounding. But today it's really a problem. So we were looking together with a large corporate. We were looking on using blockchain for a personal data exchange marketplace where you can self-govern your data. And the problem is, if you really want to create a product that has enterprise grade and that big publishers, large corporates want to adopt, the blockchain part becomes really, really thin. There is not much that you can then reasonably and should reasonably put on a blockchain, given the current state of the technology, when you need to be compliant, when you are a listed company, maybe even, and you need to make sure that you can handle personal data in the most secure way. So I think there needs to be technological progress, but also again here, I think the near future will be centralized because you need to be able to make quick changes. The near future will be very thin on blockchain, but eventually expand aggressively as the technology matures. I mean, you can also say go the other way around and say you build something that eventually at some point in time will be enterprise grade because we will solve everything in between. But if you want to seriously engage with corporates and get your product into the market, the blockchain end of your solution is very narrow. So
what can we expect from GP Bullhound in 2019 regarding blockchain?
Yeah, I think, one thing, we've written this report last year. So I think for 2019, we'll go a little bit with the flow. So the market is looking towards institutional investors, trying to get their toes wet, but also again centered around key cryptocurrencies, most likely, where regulational situation is clear, and eventually also financial products and derivatives that are built on top of leading cryptocurrencies like Bitcoin futures, ETFs, and we'll see where Ethereum will kick in this year. But that's again along the lines what we expect to happen, and we can be a partner in many of those situations, if that's OTC, if that's fundraising for blockchain projects, to work with technology entrepreneurs on implementing and developing reasonable stories, and where this strategic firepower can help jumpstart projects and create the network effects early on. And then I think we are a good partner of planning and diligently executing everything that's related to early funding, medium funding, strategic cooperations, and then down to a token event where we are looking to cooperate with a couple of the leading global players, because a lot of what we do in private fundraising and what they do in private or public token events has a very, very high overlap. So we're looking forward to a very exciting year and meet a lot of the leading projects and entrepreneurs.
It sounds really exciting. Now, I do have one question for you on a personal level. If you had to make a guess, who do you think is the real Satoshi Nakamoto?
Yeah, that's a good one. You should probably think of Satoshi Nakamoto more as a group of people that kicked this whole thing off. And I think there are a couple of people that are, closely associated to that group rather than it being one individual.
Sebastian, thank you very much for coming on the show. Sebastian Markowsky is a director at GP Bullhound and heading up their crypto and blockchain initiatives. They are producing technology reports and doing advisory for blockchain companies as well as other companies. Thank you very much for coming on the show.
Thank you, Nathan. It's been really a pleasure. Thank you very much.
Thank you.